Welcome everyone to this topic today on the current tax laws and Biden's tax plan. So this information is going to be as of today, December 1st, 2020. And I'm going to go right into it. So we are a regional CPA firm providing accounting, payroll, audit, and tax, as well as estate planning and business consultations. So you have any licensing, IT support, and company formation needs, you can call us, go to our website to know more, and we can help you out with that. We really want to share our knowledge. That is the spirit of our firm. And we know that when you do well, we will do well too. Today's topic is just going to be about the current tax laws that you guys might be aware of, comparing it to Biden's basically proposal. So again, I want to reiterate, this is still a tax proposal. It is not anything solid yet. It will be changed and still needs to go through the votes by the House and Senate before it can be enacted by Congress. So please make sure to this is just kind of to help you keep in mind of what the future may look like due to the pandemic and all. So we will go through all of these. It's a lot, but basically this is the overview plan of the president-elect's proposal. Personal tax, so that's your 1040 form, and Social Security tax, employer and employee 12.4% when earning more than 400,000. So that's what he wants to enact. And then we have the income tax rates increasing from 37% to 39.6%. That's the highest level. And capital gains and dividends taxed at 39.6% when the taxable income is over $1 million. And to limit itemized deduction at 28% of value if you are a earner of 400,000 or more. So moving forward, qualified business income deduction, he's also trying to propose a phase out for over 400,000. And then he will expand the earned income tax credit for childless workers age 65 and above. He will expand qualified child care and dependent expenses to 8,000. Bigger child tax credit, and if you do not have to pay taxes, you still get that refunded. So we also have the first-time home buyer credit up to 15,000, and he plans to restore the gift tax and estate tax to 2009 tax levels. And then for the business side, we'll have the increase of corporation tax from the 21%. So this is more concerning the C corporation if you have an 1120, and that's going to jump from 21% to 28%. With a book income minimum taxed at 15%. So I will go through this one by one as well. So right now I'm really just running through the topics that we have today. And to move on specifically into Social Security payroll tax. So President-elect Biden wants to impose a 12.4% Social Security payroll tax on those earning more than 400,000. So this will create a donut hole between the wages of 137,700 and the 400,000. So right now, the current climate is that the Social Security payroll taxes are only applied to the first 137,700. So between 137,700 and 400,000 will not be taxed. And his plan is to tax those that earn more than 400,000. So everybody who was below that 137,700 will be just normal as per what has been going on the last few years. And the income tax rate, so this is again pertaining to individual taxes. Mr. Biden wants to raise the top income tax rate bracket of 39.6%, to the 39.6. Right now it's at 37. So if you're earning 400,000, potentially he wants to raise the highest bracket to 39.6. So he, however, will not raise taxes on anyone earning less than the 400,000. Like I said, currently the top income tax rate is 37%. So that will bump it by 2.6% for anyone who earns more than 400,000. And we have a chart right here. If you want to take a screenshot or come back and refer to it later, this is basically the federal income tax bracket for 2020. When you're doing and going to file it in April 2021, this is the rates right now. So if you're single, that first column right there applies to you. And if you're filing with your spouse, second column. So right now that maxes out at 37% when you earn more than 400,000. And then capital gains. So the rate on capital gains for long-term capital gains, Mr. Biden wants to increase it to 39.6 for investment income if you're earning more than $1 million. Right now, it is currently sitting at 0%, 15, and 20. So we'll also kind of let you know what rates pertain to which kind of income levels. So these are the chart as well for the long-term capital gains. And if any of these pertain to you right now, that potentially could change for those earning more than $1 million. And moving on to itemized deductions. So you would have seen on your taxes, your 1040, there is itemized deduction and standard deduction. So standard deduction is at a specific rate for individuals and married filing joint. However, for itemized, Mr. Biden plans to cap that benefit at 28% of the value. So this will really limit the ability of people who are trying to lower their taxable income and all that by these deductions such as charitable contributions. Currently, there is no limit on how much deductions in terms of with the piece. And if you want to know more, that there's also a more research that can go into that. But basically, the itemized deductions will be a 28% of value. So that is going to basically limit the charitable contributions. That's one part of it. And then we also have the QBID, that's the Qualified Business Income Deduction Phase-Out. One of the plan is to phase out these deductions, which is the Section 199A, for filers with taxable income of above $400,000. Right now, the deduction becomes fully phased out when the taxable income is over 415,000 for married taxpayers. So President-elect's plan is to phase out earlier so that people can't take that deduction if they have that much income. Now we have the earned income tax credit, and this earned income tax credit right now is you have to be at least age 25 and under 65. However, with Mr. Biden's plan is to expand that for childless workers age 65 and above. And again, these are all really proposals that he's bringing up, and the tax specialists will have to kind of look into that and see how that works and come up with a solution in case any other questions come up. So this is really proposal stage still, but a good idea if you need to know more about these earned income tax credit, child tax credit, dependent credits. A lot of things he is planning to provide for the middle class citizens, more for, he's trying to tax the wealthy. So we have the dependent care credit as well that Mr. Biden plans to increase to a $8,000 expense, qualified expense. So this really increases that maximum reimbursement rate to 50%. Right now, the maximum qualified expense is $3,000 and the reimbursement rate is at 35. So with that, if you're claiming a dependent, you're going to be able to increase that deduction and get that credit back for yourself. And for child tax credit, President-elect Biden plans to increase the child tax credit from $2,000 to $3,000 for children aged 17 or younger, and providing a $600 bonus credit for children under 6. Currently, there's only $2,000 for children age 17 or younger, and $500 for, I believe, after 17 years of age. So that would really help those with some hardship in terms of having a lot of people in their house, but also needing just a little bit of boost. So this will help increase that money in their pocket. We also have the first-time home buyer credit, and Mr. Biden plans to provide up to $15,000 in tax credit. So I believe this credit actually came up before and they revoked it, and right now he is trying to bring that back again. So there are no tax credits for first-time home buyers currently with all the recent tax changes and everything. But 15,000 is going to help in terms of boosting the economy to really get people to buy houses and also just be able to bring up your family and be able to live comfortably. But also, it is a credit, so that would help. And then we have the gift tax and estate tax. This one has a lot of wording, so I'm going to go a little bit slower, but Mr. Biden plans to restore the gift tax and estate tax rates and exemption to 2009 levels. So that is a little bit helpful because back then it was a lot more generous as compared to the recent ones in terms of gift tax and estate tax. So this would eliminate the basis step-up rule, and capital gains would be subject to tax at death of the person who owns that. And then plans to reduce the estate exemption to 3.5 million and gift tax exemption to 1 million. So he plans to impose the top tax at rates on taxable estates ranging from 40% to 80%. Currently, the basis of assets passed on to beneficiaries at death is increased to the fair market value of the asset as of the date of the decease. And exemption currently sits at 11.58 million, currently taxed at a graduated rate basis from 18% up to a maximum of 40%. So those numbers right there, you can kind of look, and I don't want to just be reading it, but basically he plans to restore that gift tax up to the 2009 level. So if you've actually claimed that gift tax in estate in 2009 or 2008, you would really see the difference from then and now if you had been given gifts or estate. Another thing for this, we're moving into more of the business side of taxes, and Mr. Biden basically wants to settle the corporate tax rate at 28%. So if you have a C Corp, right now, if you have a corporation, when you do your taxes at the end of the year uh, on April 15th, or if you extended it and go on to October 15th, you do have that tax rate of 21% on your profits. So if it's a loss, you don't have any taxes on it. But right now, if you look at your 1120 C Corp, it is taxed at 21%. So he wants to increase that to a 28%. And he also wants to establish a minimum 15% tax rate for corporations with book profits of 100 million or higher. So this really will hit the major corporations in terms of those who earned a lot. Small businesses probably won't change that much. You will still be taxed at that 28%, but in terms of that book profit of 100 million, you will just be comparing the regular income tax. So take your end line, your taxable income, multiply by 28%, and compare that to the book profit. And if you make more than 100 million, that's taxed at 15%. Right now, there's nothing that includes the calculation of the book profits for corporate tax rate, but right now it's only at 21%. So it will hit businesses, but this is trying to just recuperate for the economy in general. We also have the tax on global intangible. This will be low taxed income. So Mr. Biden plans to have tax on foreign income generated from mobile and intangible assets, such as patents, trademarks, copyrights of American corporations. So currently, it's only requiring multinational companies to pay a tax of 10.5%, but he wants to take a look at the patents, trademarks, and copyrights, especially those kinds of assets that are intangible in nature, and that is going to be increased to 21% tax. Again, a lot of these right now are just proposals. There's no specific examples for these, but this is what his right now cabinet came up with, and that's what is going to be interesting to see in the next couple months as he gets transitioned into the office. So a lot of that comes back into this whole overview where he has some ideas on personal taxes and also business taxes. And like I mentioned, the Social Security payroll tax rate, he is trying to change that with the income tax rate at higher rates for those maximum threshold ones. When he's not going to change anything in terms of those that are earning less than 400,000. And then rate on capital gains. Again, if you have long-term capital gains, that's when you want to take a look at it, because that percentage when you're doing your taxes is going to potentially change. And then we have the itemized deduction at 28% of value. So as long as you are having charitable contributions or anything that maxes more than the standard deductions, you really want to pay attention to this law that comes out. And then we have the earlier phase out of the qualified business income deduction. So instead of the 415,000, sorry, you kind of have to phase out at 400,000. So he's also trying to expand a lot of these tax credits, especially like the earned income tax credit, having people who are 65 and over, who are childless, and they can get that credit. Right now, there's no laws on that specifically. It's only those between 25 and 65. And then we have the dependent care credit and child tax credit. He's really trying to expand that to give people more of an incentive in terms of really making sure that the economy kind of gets back on track to what it's trying to be. So we also have the first-time home buyer to encourage economic growth, and then gift tax and estate tax. For the business tax, in terms of corporate tax rate, keep in mind 21%, now it's potentially going to be 28. So kind of think about how that 7% will affect your bottom line. And then we have the tax of intangible assets, which that will have to need more look at. But basically, these are very broad general ideas that he have, and I think, yeah. If you have any questions, please feel free. You can type them on the channel, or you can email us, call us, and we can kind of let you know what we know in terms of these information. Right now, that's very basic on top of topics. We're just touching on really relatively scarce information too. So we want to kind of make sure that when we do our tax planning next year and we do our taxes next year, we just keep in mind that these are potentially going to change. This is not going to happen right now in terms of the 2020 taxes, because we're almost done with 2020. And in terms of getting the laws to be enacted into regulation, that is going to take a little bit of time. It's almost like the last tax change with the Tax Cuts and Jobs Act. That also took a couple of years. So just keep in mind that really we're just trying to keep you guys informed. So feel free to let us know if you have any questions, very specific questions as well, because these are very general overviews. And feel free to join us on Zoom at 3 p.m. every day. You can also look for our past YouTube videos, and we will keep updating our website and YouTube as well with new topics as we get them, especially since it's past the election and we have a couple weeks coming up to the new year. We really want to be able to help people get a good sense of what's coming in the future, especially with our current situation. But Feel free to email Katrin to get on the mailing list, and you can call us 515-288-3188. That number goes to all 3 offices. And then we are open Monday through Saturday. The Des Moines location is, but we are open Monday through Saturday, 6 days a week from 8:30 a.m. to 5:30 Central Time. And yeah, thank you so much for joining us today. It's just a little tidbit on the current situation and the proposed situation. So feel free to refer back to the video at another time, because I know that's a lot of information coming at you. So feel free to contact us, email us, and we have the basically all the social media accounts right there for you. So you can kind of check us out if you are interested. Stay tuned for more, and we'll kind of come back on that and help you guys with more information, keep you guys updated. Thank you everyone for staying. Have a good day.